because the property that I'm in right now, I got a super deal on it, and guess what kind of loan I did? I did a 203K. I did just because I know how to do them. But a 203K is it's an FHA-backed mortgage, but it allows you to take the purchase price and the renovation amount and roll that all into one. So I'll just do a quick basic scenario because I've taught this class for about 10 years. House costs $100,000. You want to put $50,000 into it. Let's say do a new kitchen, new bathroom, finish the basement, things of that nature. Your total down payment is going to be based on your total acquisition cost, which is $100,000 for the purchase price, $50,000 in renovations. With an FHA 203K, you're putting 3.5% down of $150,000. There are other fees and things of that nature involved, but the essential transaction, that is what it is based on. And that's the best way to think about it. The good thing is that the lending is done on after improved value. And that's what actually worked out for me. With after improved value is that the bank is going to value the property, not in an as-is condition. That's extremely important. So it could be what we call a total dump. But if the after improved value, let's say you buy it for 100, but the after improved value is 180, the LTV and everything is going to be calculated based upon that. So you're actually getting in there and getting a great deal, getting all those repairs and everything done. All repairs are done after settlement, which is also fantastic. So you can do plumbing, HVAC. I mean, I've done mold remediation before, which was okay. Brand new well and septic systems. You can even do what we call pop the top, which is literally as long as a structural engineer says that the property can be excavated and can actually handle whatever the addition is, you can actually add an addition to a property. So a lot of times the reason why that program is really, really important is that some clients, depending on the price range or depending on where they're looking, some houses, every neighborhood, you might want to be in that great neighborhood, but you found that house that needs a little bit of work and you've got to put a little elbow grease into it, it's a great option available. So the rates are going to be higher because banks are also lending on after improved value. So the interest rates are definitely going to be a little bit higher. In this lending environment, they're going to be a lot higher because this is a very, very risky product. But, you know, everything is risky, is risk and reward. So we have also the home style renovation, which is a conventional product, same exact concept, where you can renovate the property and you're also just doing conventional financing, actually going to require a higher credit score. Typically with a 203K, the guidelines used to be you had to have a 640 credit score. Now you're probably talking 660 to 680 at a minimum. I personally would recommend a 680. You want to try to get that credit score as high as possible in this lending environment because the interest rates are going to be a lot higher. So yeah, I love 203Ks. They're a great product. I think for a lot of people, for a lot of investors I've learned with over the years, it's been their first introduction to working with contractors and understanding the construction process. So if you want like a beginner's guide, you have to have a licensed contractor. It's a really, really good way to try to get into the process, working with the contractor from start to beginning to end. The other good thing about a 203K is that the lender it's in the best interest of the lender to protect you during the transaction. So you have to have what's called a HUD inspector, which is somebody that actually goes out, make sure that all the work and the repairs are being done. And actually that person makes sure that the bid that you get from that subcontractor, that contractor you're working with, is along normal price points. That's extremely, extremely important because I had a customer. They were looking to redo a bathroom. Contractor gave them, said it was going to be $55,000. This was a really, really extensive job. HUD inspector came back and said, this is a little high. It needs to be at 42. Numbers got adjusted down. So those are the protections that consumers have when doing a 203K loan as well. So obviously, I teach CE classes on this, so the class is like 2 hours long. So I just tried to condense 2 hours into about 5 or 7 minutes. But I hope that made sense. But yeah, 203Ks are really, really great products as well.
Yeah, I can personally attest to it. I have experience doing that, and it's for if you're a first-time home buyer, you can certainly do this program. It's not as scary as it sounds. You will have the contractor from the onset that your realtor, myself, or you can also bring your own contractor. They will look at the work. They will give you the expense, just like Aaron said. They will let you know how much it's going to cost for the whatever renovation that you want to do with that house. And then we are attacking the renovation amount into the loan. So it's a really awesome option if you want to buy a fixer-upper. You know, you have a vision, and it's like the homes out there are so expensive, but you can get a good deal and just do this renovation project. So for first-time home buyers, experienced buyers, you know, it's a really, really great product. So thank you for that information. Now, VHDA.
Oh, I gotta go again. VHDA, I love VHDA, Virginia Housing and Development Authority. So literally, if the consumers out there, VHDA.com. It's a bond program sponsored by the state of Virginia, which has it's a first-time home buyer product. My favorite is the VHDA grant with a conventional or with an FHA loan. And basically, in layman's terms, is that if you put up 1% of your own money, so if a house is $200,000, if you put $2,000 into the transaction, VHDA will either give you a 2.5% grant or a 2% grant that does not have to be paid back. The reason why that's so important is that you instantly created equity in that property. And if you're thinking about it from a long-term real estate investment prospect, that's a huge, huge way to start, is that your first property, you literally created 2% of equity, but you could have gotten the same FHA loan, but you just borrowed VHDA's grant funds. Also with the VHDA loans, you're eligible for what's called an MCC, which is a mortgage credit certificate. That MCC, and I know they just changed the guidelines, so don't quote me, but it's going to be based, I think it's income based now, to where it's going to be a certain percentage of your income, which is a flat tax credit. Before, it used to be $2,000, which was if you made $75,000, as long as you had that mortgage through VHDA, you would get a tax credit on your bottom line. So not only were you able to get a grant, you're also getting a tax credit as well. This is one aspect of VHDA that a lot of people don't think about, but their home buyer education is fantastic, and their class is fantastic. And for people that really have, even if you're talking to your loan officer and you're getting all the right information, but you really want to dig into a really, really good course, I highly suggest taking that VHDA online class. It's free. All you have to do is have an email address. I know that might sound pretty sarcastic, but you can take that class. It's good for 2 years, and you learn so much just about the process, the different expenses, from start to finish, budgeting. I can't tell you how many clients that we've had to go back and forth with underwriting, and if you've done VHDA before, hey, we need a budget, and clients are really sitting there saying, Aaron, you know what I learned through this process? When VHDA made me sit there and do that budget, and it really opened my eyes. So check out VHDA. They have conventional products as well. They also have an FHA product or conventional product where you can have a second trust. It's totally different than Gary's, but basically the second trust acts as your down payment. So whatever your rate is, let's say your rate is 4% on your first trust, your second trust rate is going to be 4% as well. It does have income limitations as well. There are sales price limitations. So it really depends on the county that you're looking to purchase in, but VHDA is a great product as well, and it's really provided a good opportunity for families to become real estate investors.
Yeah, and I think one of the things that also is really awesome about VHDA is their rates. Like, they have extremely low interest rates, mainly because it's sponsored by the state. Yep. Also, they don't run out of funds, which is, something that will become, relevant come October for a lot of the government programs. So as long as they're in business, I know they do have limitations, but the way they budget it out, the way they plan it, because I did VHDA for about 10 years consistently, and I had never on one transaction ever been in a situation where they said, sorry, we don't have, the money available.
Yep.
Whereas, with USDA, pretty much every September, October, fingers crossed.
Look, Gary, don't write a contract, right?
Or at least you better get that registration in quick.
Yeah. Oh, the other, I appreciate that, Gary. The other thing about VHDA is that even in this credit climate, I was actually able to speak to one of the top executives when everybody else was restricting, because they're a bond program and because they service certain communities that are impacted, they did not change their credit guidelines. They adjusted their pricing. So their rates did creep up a little bit, but you still can get a VHDA loan with a 620 credit score. So, I remember, everything changed, but you're talking about families that can get a grant, have a 620 credit score, and immediately move into a property with equity and have the MCC, which is the mortgage credit tax certificate as well. And they're getting quality home buyer education. So it's really a phenomenal program, but all these programs are phenomenal. You just got, as a consumer, you got to figure out which box you fit into. Right. Gary's program